Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's keep going with our euro analysis. Yesterday, market actually has completed our suggestion that, well, actually the performance was looking general bearish, and we have suggested a possible drop. So currently you can see market has completed this suggestion, and also some in other moments that we talked about, this market currently is fulfilling. So that brings a bit more confidence that downward action really could continue, and market should also try to challenge the major lows here, which was not touched yet. So you can see here on the daily chart. We have additional fundamental background for that, or better to say not quite fundamental, it's a bit news background. As you know, probably this energy collapse in China and in northeastern regions, where this lack of coal for factory and human being. So there's problems with the fuel in Great Britain because of the Brexit and some difficulties in transportation. And gas is also rising in price significantly. So with this additional background, it just supports the dollar, so currently, and provides demand for safe haven assets for dollar, for dollar-nominated assets. On the dollar index, we also see nice performance. So you can see market shows a bit more aggressive action compared to the euro, just because of the Great Britain pound has dropped significantly recently, and it's also part of the dollar index, so it's just adds some power for upward action on the dollar index as well. So you can see market already has testing and taken out of the previous top. And so in fact, on the dollar index, you can see that this ABCD pattern that we have on euro currency now is completed. But we still think that might be some bit greater upward action just to complete the 3-drive pattern, and this will be a nice pattern that could trigger the reaction on the strong level. Just don't forget that. As you can see on the dollar index, it's a bit different. I mean, the target of the ABCD, 3-drive, and major confluence resistance here. But on the euro currency, this confluence, which is a support on the euro, and the target of the ABCD stands at the same point. So if we have the dollar on the dollar index, we have the 3-drive, which could trigger significant action in opposite direction. Currently difficult to say what the background will be for that, but probably it will be found. On the euro currency correspondingly, it also provides interesting setup for possible taking long position, because there it's promised to be also more or less significant reaction on the strong support area. That's what we're waiting for taking the long position on the daily chart. Additionally, while the dollar might be well performed today as well, and maybe in tomorrow, you can take a look at the interest rates. So 10-year yields have shown really very fast action. It's flirting with the major 618 level. Hasn't quite reached the XOP, but it's barrier for this overbought area. So it's very fast acceleration on the interest rates. It definitely supports the dollar and will make impact on the market today probably as well. So that is what we have additional factors why actually euro could keep dropping in the nearest time. Speaking about directly on the euro currency, it's also a few moments that we also mentioned recently that well, just supports our view that probably here we should get something to the downside. And take a look on the fall time frame chart. On the fall time frame chart, indeed, market has taken out of these lows, and take a look what the price action we have. We said we should not get the Russian rinse, would not want to see the fast return right back up. Market for us, for our purpose, has to stay below the lows, and that will provide us more confidence that overall stop stands bearish. That's actually what we have currently. So take a look, market has dropped and now can't return it back up. So it stands below the lows, which is good. for bearish purposes. Also, market has formed a bearish grabber here, as you can see on the 4 time frame chart, that suggests the taking out of these lows. This pattern itself has special meaning for euro currency on intraday charts, and actually it might be the key to reaching of the 116.20 area, because this is some kind of the indecision pattern. This is high wave. It has been formed, and the borders of this high wave, top and bottom, has the special feature importance. So usually market falls in the direction of the breakout of the high wave pattern, but since we have already the grabber, it slightly increased the chance that market will take out of these lows, and if this will happen, that might be the triggering moment for downward continuation and reaching of the 116.20 target. So that's what we have on the 4 time frame chart. On the hourly chart, you could see just better the way how market performs here. So this is the lows, and you can see how accurately market stands below. So it seems that it's just really big barrier here to return. Some new sellers probably step in, and you can see the sellers pressure exists here very clearly. So long tails here, this market just can't return the back up above these lows. So some new sellers stepping in on the breakout, pressing market down to trigger the major breakout of the 1665 lows. This is red line is the major lows on the daily chart, and now market stuck between the local lows and major lows. And here's the sellers are pressing on the market, just triggering the stops, trying to trigger the stops below this area, and trigger the breakout. So how usually market makers works, they start to sell before a breakout, and when market breaks the level, triggering the stops are buying stops. So the selling stops. So sorry guys, the market makers starts to use these orders to close their positions, and that's their profit. So starting from this point to the stop orders that stands below the lows on the daily chart. So with all environment that we have here, it seems that it's a really big chance that market could and should actually continue downward action and finally trigger the stops below these lows, challenge the lows, and hopefully will reach the 1620 major target on the daily chart. Besides, here we have some signs of the bearish dynamic pressure. So we can see this MACD is rising, while here we have tendency of the lower lows and lower highs. So it means that here might be some acceleration to the downside. Speaking on this flag consolidation, you can see that market currently can't return back up and reach the upper border of the flag, at least at this moment, which also looks bearish. It might be the classical elder reversal to the downside. So mostly we keep the same view as we discussed recently. We are not buying until market will not reach our major target. We're taking the short position if you haven't taken the short yesterday. Here, well, currently is even more tricky situation, because currently you will be involved if you try to sell in a clash between the market makers and just individual traders, just people who are trading on the forex market. It will be the type of action that you can see here. So probably you could try to do this, but be careful with that and plan in advance where you place your stop. Probably it should be somewhere, I don't know, maybe above 1711 area. Should be enough for current trading setup. Alternatively, you also, as I said, could try to take the short position using the stop sell order at the moment of the breakout of the major lows. Better to place it before breakout, so slightly above, around 1670, maybe 1668, because if you place it below it, you could get the slippage and less worse execution. So that's actually a few moments that we'll intend to watch, and let's see what will happen, because market is currently turning to the culmination moment.